Hey, I just want to give you some big news that the IRS has prevailed on a limited partnership, which normally by the law is not subject to self-employment tax. But the IRS just prevailed in court, and the court found in favor of the government, the IRS, that even though this entity that is the subject of this case is a limited partnership, the net income nonetheless is subject to self-employment taxes. And the tax bill along with that is about $13 million just in self-employment taxes for the amount that is under review. Now, we know there's not going to be a statute on some of that, and it's going to be applied to future and past years. Why am I telling you this? We need to ensure that if you're in a circumstance where you have a limited partnership, you have clients that are limited partnerships, or an LLC or an LLP, you pick it. And if your position is, well, because of that, they're not subject to self-employment tax, because that's how the law reads. But what the court found is, yeah, in name only and in structure, yes, at the state level, they're a limited partnership. But for IRS, for US tax purposes, federal tax purposes, they're looking at the facts and circumstances and going, you were active, you were involved. So all of that net income is going to be subject to self-employment tax. There's not a way to break out the roll. It's not possible. Court case after court case has denied one individual who is a partner to say, well, I have this role and I have this role, and this is the active role and this is the passive role. Doesn't fly in court. Got links in the body of the video here. So the thing I just want you to note is we do have to determine this each year, whether or not something's passive or non-passive, which also leads to whether something, when I say something, a partnership, is subject to self-employment taxes. So we've got to be extra mindful of this, because with a court case like this, it doesn't mean the IRS is now going to be on a hunt out for this, but it's just that it might be easier for them to go and question partnerships that are non-passive on Schedule E, page 2, which there's a column that says non-passive. There's a code for partnerships called P. You put those two together and they go, well, we didn't see that this net income was subject to self-employment tax. Let's have AI just send out a letter and just say, hey, as the referee here, we just want to verify you got it right. So let's make sure we're getting it right. And fellow tax pros, if you have clients that you're afraid to let them know that this is now subject to self-employment tax because they're going to be mad or they may go somewhere else, well, that's my first indicator. You need to just go ahead and fire that client, because you cannot be afraid of our clients anymore related to these issues. We've got to just call it like we see it as it relates to this, because when we're talking about a court case like this, as monumental as this is, we don't have a leg to stand on to try and argue. So a lot of this comes down to the documentation, time logs. And so we want to ensure that if we're taking a position with a partnership that it is not subject to self-employment tax, we better really know that it's not subject to self-employment taxes, and not just go by that kind of maybe rule of thumb or what we think the default is. All right. Hey, JJ the CPA here. Hope you're doing well. And with that, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.